name is Bashir Nakib. I believe my friend Malawan have introduced me through the brochure that I have sent to you. I used to be a consultant regulator in Qatar with Qatar Financial Consultant, and have been also with ICBC, the Industrial and Commercial Bank of China, and the Royal Bank for Scotland, and a couple of firms under KFC system, collaborating with Mr. Ali Sulaiti at Central Bank with many financial services in Doha worldwide. I could go over regional area and international too, as a speaker, consultant, trainer, and so on. Now, we're going to cover today the effective COVID-19 guidelines enhanced customer due diligence. And we'll spoke also about what? About March 6, 2020, FATF recommendation about CDD and KYCCC, why it is important, and all those issues. So why KYC is necessary? Can you see slide number 3 now? Can you see slide number 3?
Yeah, we can see, yeah.
Okay, great. So our agenda is about why KYC is necessary, why financial institutions like banks, insurance companies, and others are easy AML targets, the importance of KYC as advised by local and international standard, the Know Your Customer Guide, and what it aims to achieve. This is the core training today or webinar about the KYCC. When we are going to achieve simplified CDD or medium CDD or high-risk customer, when? We are going to cover, as I said, the COVID-19 guidelines, the enhanced due diligence, what's all about and when it's applied, how do we escalate enhanced risk, the record keeping, and we are going to cover essential proper KYC, CDD, EDD strategy. During this webinar today, we are going to show you a couple of videos from FATF about COVID-19, launched by FATF in May 7 and July 30. So we'll have more insight about the risk under COVID-19 and how to be prepared to encounter those risks. Moving forward, the problem is KYC, know your customers, know your customers, know your correspondent, know your employees, and know your shareholder. This is slide number 4. Can you see it? Okay. Now, moving forward, what we are talking about. Financial Action Task Force issued a paper recommendation on digital identity guidance dated March 2020. This digital identity issued by FATF covers what exactly? It covers CDD requirements for natural persons, identification verification under recommendation number 10, which means what exactly? It means here, let me adjust my screen, identity proofing and enrollment with what? With biometric, obtain identifier, name, date of birth, ID number, etc., and ID evidence. For those attributes, validate and verify ID evidence and resolve it to identity proofed person. The binding part, issue credentials, authentication, linking the person in possession control of the credentials to the identity proofed individual, like linking the identity proofed individual to the onboard customer to the customer ID. Authentication level, are you the identified, the verified individual who has possession and control of the binding credentials applied to 10A under this recommendation if the regulated entity is conducted identification verification of a pre-existing ID system. What do I mean exactly here? In March 2020, FATF guidance includes 5 sections: the introduction, the digital ID terminology and key features, the FATF standard on customer due diligence, the benefits and the risks of digital ID systems for anti-money laundering and countering financing of terrorism compliance, assessing whether digital ID systems are sufficiently reliable and independent under a risk-based approach to CDD. In this process about digital ID verification, we have an applicant under step 1, collection and resolution. Under collection, we collect the core attributes and attribute evidence and resolve to a unique identity within a population or context. Under step 2, we have the validation process. This authenticity and accuracy of identity evidence information determined and related to a living individual. Under step 3, we have the verification process. Confirm ID relates to the applicant. Is it correct, genuine or not? And through these applications, those steps, collection, resolution, step 2, validation, and step 3, verification, register, enroll identity approved applicant, established identity account, and bind subscribers' unique verified identity to authenticators controlled by subscriber. Moving forward, under this process, we have a couple of questions. Question 1, is a digital ID system authorized by government for use in customer due diligence? Question 2, do you know the robustness and assurance level of digital ID system? Question 3, does the digital ID system provide a sufficient for a level of knowing money laundering and terrorism financing risk? Going back to question 1, is the authorities have either allowed or mandated the use of the ID for CDD purposes? Why? Because under this digital ID, because it's reliable and more efficient and independent that can be used for CDD. Nowadays, my friend, worldwide, banking, because of COVID-19, everything went to digital artificial intelligence. Distance behavior. We cannot go to banks anymore. Everything is done online. So everything done online, we need to have verification. A customer opening an account online. How do we do it? And what the technical requirement? That's why FATF answering those questions, and we need to have to do we have a digital ID reliable or not reliable? We have to take a decision, take action, perform or obtain a system, select appropriate solution for CDD and other factors. In the market, there is a lot of companies providing this kind of digital ID verification. Some are based in Qatar, some are licensed now already by the Qatar Financial Center Authority, like Valores in Doha. Valores international company. We'll talk more during this webinar about what Valores can provide for banks, financial institutions, and other companies under digital ID verification. We'll give you a case here, misuse of digital ID by Stroman. This happened in Sweden. Sweden highlighted the money laundering terrorism financing risk arising from criminal systematic use of strawman, the digital ID, to launder proceeds of crime. This is a risk that could exist also in the face-to-face transaction, but is provided to illustrate how these attacks could take place in the digital world. Under the payment system services provider, it offers a real-time transaction are especially useful for guidance and so on, together with misused digital ID, make it possible to quickly transfer money between various accounts. We have criminal group. This is slide number 10, if you are following. We have a criminal group, a user of mobile phone, like I'm using my mobile phone to talk to you. We have a couple of straw men with digital identities, opening bank accounts in bank accounts, couple of bank accounts. Bank number 1, bank 2, 3, 4, 5, 6, 7, 8. Now you can open account online directly. When criminal groups wish to launder money by misusing digital ID, they first need to open bank accounts, which are done by strawman. The role of strawman is to open a bank account, obtain digital ID and a security code, and provide their credentials to the criminal group in exchange for money. Multiple digital identities can be used on a single mobile phone or tablet. The bank accounts are then controlled by criminal group. It is important to know that the overwhelming majority of digital ID that are misused by criminal groups are issued on this basis of legitimate identity evidence, the proof of identification. Source of this is from Sweden and from FATF paper dated March 2020. Going forward, we have a case that happened in Nigeria for verification number, Nigerian bank verification numbers. In 2015, Nigeria began a biometric verification pilot for all civil servants in an effort to improve the accuracy of personnel record and reduce payment ghost salaries. Central Bank of Nigeria required that all customers enroll with their bank to get their unique bank verification number operated by the Nigerian Interbank Settlement System. In early 2016, they announced the removal of 24,000 ghost workers, and that number has since doubled, saving the taxpayer equivalent to $74 million. Source is Digital ID Onboarding from the World Bank 2018. Let's all remember, my friend, that the 4 elements of a KYC under Basel recommendation, the Basel paper dated October 2001, customary due diligence for bank speaks about 4 elements of KYC, the customer acceptance policy, the customer identification, the monitoring, and risk management. Under this process, moving forward, we have some key elements of an effective AML CFT framework, the customer identification Can you hear me, please? Can you hear me, please? Yeah, okay. So some key elements of effective AML CFT program with the customer identification and due diligence, the training, transaction monitoring, suspicious transaction reporting, record keeping, and internal controls and compliance and audit. Under customer identification and due diligence, this is, you can see the slide.
Not yet, Mr. Bashir.
Yeah, fine.
Mr. Bashir, we have a question from Mr. Ghanshyam.
Yes.
Ghanshyam, can you unmute your mic and ask your question?
I'm listening.
Yeah, good morning.
Good morning.
See, I have one specific question. Is in Qatar, when we do KYC CDD, we ask for, I'm talking about institutional clients who come from outside Qatar, corporate institutional clients who come out of Qatar. Now, in order to perform our KYC and CDD, we want certain personal details for certain individuals. If the individuals come from a jurisdiction which has privacy laws, especially who come from the Western Europe, they have very strong privacy laws which forbid, which disallow the personal details to be shared in other jurisdictions. So how do we manage these two things?
My friend, let me tell you something. Whether in Europe or other parts of the world have privacy laws or data protection laws, whatever the case is be. Under AML law number 20 of 2019 issued in Qatar last September, and executive order issued by Council of Ministers in Doha about AML and CFT and terrorism financing.
Can you say which one?
Sorry? Please repeat.
Yeah, can you repeat what you just said last line, sir?
Yeah, just a minute. I was saying, if you have customers, as you're saying, from Europe, and they refuse to provide information based on privacy laws, right? And data protection, correct?
That is correct.
Now, you are residing in Qatar, in a bank in Qatar or exchange company or whatsoever. You should abide by the law number 20 of 2019 of AML CFT, correct?
Correct. That's right.
Now, any customer who wants to open an account and do business with you, he should abide by this law, and you cannot neglect the components of the law because of you omit certain part of law number 20. It means you are not complying with law, and you'll be subject to penalty and imprisonment, correct?
Correct.
Non-compliant customer, you have here a non-compliant customer. Do you want to onboard non-compliant customer? This is your call, this is your decision, my friend.
I think you answered the question. Thank you.
Okay, sir. Most welcome. Now, on the customer identification and due diligence, we have to identify the customer, the expected type of activity and counterparty, the volume of the activity and international activity. Is the customer doing international activity or not? Why? At one time in the 90s, I used to be a branch manager of ABN AMRO Bank, the Dutch bank.
Sorry, Mr. Bashir, we are not saying the slide.
The slide, this is not seeing the slide?
No.
This is slide number 14. Can you see it?
It's not appearing here.
I mean, it's not shared, Mr. Bashir.
Let me double check.
Thank you.
Share screen. Share screen.
We can see now.
You can see it now?
Yes,
You
Mr.
can see it now?
How about the others? Okay, brilliant.
Yes, we can see.
Okay,
Go ahead.
excellent. Now, I was talking that earlier, about this slide, customer identification and due diligence to identify the customer, the expected type of activity, the volume of the activity, and what? And the international activity. All times, 1996, 1997, when I used to be with ABAN AMRO Bank in Lebanon as a branch manager, at those all times, we didn't have AML laws, neither in Amsterdam or in Lebanon or in the Gulf country or elsewhere. But our policy as a bank, as a Dutch bank, was based on this. When a customer opened an account, we used to ask him, what type of activity you are going to do with us? You want only to open saving account, checking account, you want to have overdraft, to have documentary credit, international finance, or else. If the customer opens, let's say, a checking account or saving account, and tell us while opening the account, he will not be receiving international transfers. And he signed the application at that time. The application used to be like the KYC now. Now, our best practice with ABN AMRO Bank, when it's this kind of customer receives international wire transfer or SWIFT transaction from USA or from Europe, the policy was to reject the execution of this transaction without informing the customer. One of the customer came and objected. He said, I received a transfer. You didn't advise me. We told her, yes, because you told us in advance when you open the account, you will not be receiving any international transaction and you will not be sending any transfer outside Lebanon. Now, this bank is not any like Lebanese bank. They can provide flexibility. You came to our offices, we are residing in a tower without having billboard promoting the bank that you are doing business here and there. So you came here as a safe harbor for certain reason. This is your own reason. But we stick by our policy. You stick by your signature, opening the account and your declaration. You are not doing any international business. If you want to do international business, you have to come to us in advance and modify your application so we can, once we receive a transfer or SWIFT transaction, we can advise you accordingly. Since you are not transparent with us, then we have to close the account. And we used to close the account. And as I told you, in 1997, 1996, we didn't have AML CFT laws, but the policy of ABN AMRO Bank coming from Amsterdam was so strict, okay, it made customers, they do not like us because we wanted to stick by the international European standard, not the local standard. That's why here I mentioned this example to give you about what we are talking about, the international activity of the customer. How far do we know our customer? How far can we reach this customer, classify it as low risk, medium risk, or high risk? How far we go ongoing review about the customer, issue a call report. Is the activity consistent with expectation? What's a call report? Call report is done by relationship officer who visit the customers from time to time because they are promoting the bank services or the customer has applied to get a loan or facilities from the bank. So relationship officer or branch manager or corporate officer make a visit to the customer. Under this level, those persons for the bank or financial institution should issue a call report a report, we call report because they call the customer by visiting him, stating that the customer resides at specified address, they met him at this date, and so on. Report, my friend, is classified as address identification. You can face customers sometimes provide you an address, let's say, in said area, under building this and this and this, and specifying certain street number. Customer residing in said area under this address and same building, same level or floor, the core report done by the relationship officer visiting the customer is a proof of customer address evidence. If you have at your level call report or relationship officer visiting your customer, you should insist on obtaining copies of those call reports in your files. Why I'm saying this? Because the regulator, once visiting your bank or exchange company or financial institution, sure how you are doing, how far do you know your customer, with ambiguous or not complete address of the customer, you show him the call report done by your relationship officer as evidence or proof that the customer really exists under the mentioned address. Now, we are talking about is the ongoing review. Is the activity consistent with the expectation? Is the customer really, he says what he declared, what he's doing, what he said before? Under monitoring, my friend, we have always to do this process. You see the slide? Hello?
Yes, Mr. Bashir.
You are still with me? Okay, sir. So under monitoring, we have always to have enhanced risk assessment methodology to conduct detailed analysis of each category. Purpose of stage 1, activity in account stage 2, of business stage 3, location or the address of the customer stage 4, and stage 5, product and services offered. All those stages subject to monitoring to make proper risk assessment at each level. The whole process falls under monitoring, and this kind of monitoring will help you to assess the risk of your customer. Moving forward to slide 16, in banks under AML law number 20/2019, the regulator speaks about risk-based approach, about the KYC process. Under risk-based approach, we have customer due diligence and different level of CDD. We start by simplified CDD. This simplified CDD is level 1. Is there a red flag here or not? Limited CDD is level 2. Do we have public record research? A standard CDD, do we have limited source of inquiries? Under level 3, public record search. Enhanced CDD. Also, this is level 4. Do we have in-depth public record, specific issues raised under red flags, and so on. Now, the risk-based approach requires a leveled approach to CDD, which means the regulator and FATF recommendations spoke about the process of risk-based approach. What we are talking about, this is slide number 17. FATF suggests the risk-based approach. This is what FATF suggests a risk-based approach based on business, the retail business, loan, or investment, the product offered to the customer. Is it a loan, margin trading in capital market and stock exchange, or investment? Is it cash business? The delivery channels, is it electronic like we are doing now under COVID-19, mobile phone, face-to-face or not face-to-face. The customer is individual, corporate customer, a PEP, or trust, etc. An AML customer risk model will provide a risk score based upon the risk associated with the combination of customer type, the products used, and the geographies where business conducted. What do we mean by geographies? We are located in Qatar. Our near country, we have UAE, we have Saudi Arabia, and we have Iran and Bahrain. Iran under FATF is classified as high-risk country. Now, any customer coming from Iran or a customer coming, let's say, from Saudi Arabia or Kuwait or UAE or Bahrain, those are classified now because of the blockade, economic blockade on Qatar, as high-risk customer. Depends who those customers are. Used to be PEP, doing trust business under SPV. Do you know what that means, SPV? Any idea?
Special purpose vehicle?
A special purpose vehicle. Why do we have special purpose vehicle? What's the reason?
For some specific purpose.
I know for
the institution is built for particular transaction only. So you could have a general business, but outside the general business, they create a separate entity, and that entity is created only for a particular type of transaction or a particular transaction.
What's the risk of this SPV? Is there any risk?
Yeah.
Yeah. Tell me about it.
See, the nature of the nature of creating this entity, if it is not in line with the general business which the client has. So if the client is, suppose a Harvard University, the nature of business, the general nature of business is to provide education, provide research, those sort of things. But if the special purpose vehicle is to create an investment company to trade only ETFs, that is something very different from the general business. So if you have an SPV which is totally different from the general line of business, then it should raise alarm in the AML section.
Correct. It should raise a flag. When the flag is raised, you should enhance the due diligence about this issue. I'll give you an example. At one time, we used to be with ICBC, with the Chinese bank in Doha. And Qatar Airways wanted to lease planes from Airbus, lease to buy. With the Chinese bank, we had aviation division in Asia. Under ICBC, we used to provide syndicated loans for Kuwait, for Qatar Airlines, Kuwait Airlines, Emirates, and else. At one moment, the government of Qatar provided counter guarantee to this transaction. And the government of Qatar created an SPV in BVI for the purpose of execution of this syndicated loan, amounted at that time, 10 years ago, to $50 million. That Qatar Airways can lease planes from Airbus on lease to buy after 10 years. Now, it depends here who created the SPV, what the purpose of the SPV, what it's going to cover. At another case, the Chinese bank was approached by a bank in Bahrain through BNP Paribas based in London. They proposed the transaction syndicated loan for $2 billion. One single transaction. And BNP Paribas London created an SPV, or a trust company, in Cayman Island. So the corporate officer, the Chinese corporate officer, came to my desk and asked for my opinion. So at that time, we assessed the risk of Cayman Island. FATF was making evaluation of Cayman Island. The evaluation showed a lot of discrepancies as non-compliant country. So I asked BNP Paribas London, this SPV, it falls under your responsibility as a bank or not? Do you assume full responsibility of this SPV created for this special transaction? They said, we assume no responsibility. Why I asked this question? Because I found out that this SPV created in Cayman Island is non-regulated SPV created under Cancer Society. So we are doing banking. It's syndicated loan for $2 billion. And this BNP Paribas created a SPV under Cancer Society in Cayman Island. So my recommendation at that time as MLRO was not to go forward with this transaction because of risk issued and non-compliance by BNP Paribas. And the corporate officer told the counterparty in London, we cannot participate in this transaction. 15 days later, BNP Paribas communicated with me by phone, and he said, well, we will assume responsibility and provide that this SPV would be under our full responsibility. So what would be your decision, my friend, if you were in my shoes? What would you do? Can I have feedback? Hello? Still with me? Hello?
Mr. Bashir, can you repeat the question? Probably they didn't hear you clearly.
The question is, did my audience hear the case I was talking about?
Yes, we were hearing.
Okay. My question to you, I said,
but Bashir, we missed the definition of the SVP.
Okay, I will tell you something. Arab Banking Corporation in Bahrain communicated with the Chinese bank I used to be with in Doha. And they wanted to do business, ICBC, to participate in syndicated loan.
Yeah, your voice, it's too low.
For syndicated loan for $2 billion. Okay? Now, the counterparty doing this transaction with Arab Banking Corporation is BNP Paribas in Bahrain, in London. Are you following me?
Yeah, but the voice is too low.
John, okay.
صوتك واطي سيد بشير.
يلا, it's okay now.
يا ريت شوية أعلى.
نعلي بعد؟
أيوه هيك ممتاز.
عظيم.
بس لو سمحت بس تشرح لنا التعريف الاس في بي لانه مع الانترودكشن اللي صارت we miss it.
Okay. The SPV is special purpose vehicle. A special purpose vehicles are created by banks, by companies for certain level of transaction in tax haven country. شو يعني ال SPV؟ ال SPV هي فيك تنشئ انت تراست. هالتراست هيدا في بقلبه تراستي. هالتراست هيدي بيكون الكابيتال تبعها $1000 أو $10,000 لتمرر عمليات معينة مالية for certain transactions. At one moment, in Qatar in 2000, I believe, 12, Qatar Airways wanted to buy planes from Airbus. The deal was at that time $250 million. Government of
سيد بشير
Qatar,
الصوت عم بيروح ويجي مش ثابت وواطي كتير.
خليني
يعني اذا
أشوف
في
شو
مجال بس
السبب.
تعلي صوتك شوي لو سمحت.
لحظة نشوف شو القصة. نحن هون شوف شو قصة الصوت
عم نسمع.
الأول. واضح الصوت هلا؟
يعني احسن شوي، بس يعني اذا في مجال تثبتوا على انه يضله واضح اكثر، لانه انت عم تحكي بيروح وبيجي.
هو نحن عم نحكي على الموبايل لأنه على على الزوم ما ضابط الصوت.
يا لاحظت. يعني فيك اذا فيك بس تخلي الموبايل قريب منك انت عم تحكي ما تخليه.
حاط الموبايل على التم، أكثر من هيك ما في يحطوه بقى.
طيب اوكي.
Anyway, I was talking about that. Qatar Airways wanted to lease to buy planes from Airbus. And government of Qatar at that time provided its counter guarantee. حكومة قطر وقعوا كفالة بقيمة $250 مليون بيكفلوا فيها القطر ايرويز تجاه البنك الصيني بعملية افييشن $250 مليون. صوتي واضح؟
ايه واضح سيد بشير.
حكومة قطر انشأت SPV بالBVI بالبريتش فيرجن ايلاند. شو الهدف من الSPV؟ العملية الكبيرة $250 مليون لأن ندفعها نحن لإيرباص بتمر عبر عدة بنوك. الإيرباص حسابه مع سوسيتي جنرال. الافييشن اندستري بيت كومبليكيتد، منها اندستري كثير سهله. كل قطاع الطيران مطلق شركه طيران عم تشتري طيارات سواء من الايرباص او من البوينغ او من غير شركات انجليزيه عم تشتري طيارات. تسديد ثمن الطيارات في له بروسيس معين بيمروا عبر بنوك المانيه اوروبيه، المانيه بالتحديد، لأن الألمان هن الوحيدين اللي عندهم الخبرة بقطاع العمليات المالية للطيران. مكتب التسجيل لكل شركات الطيران عمليات الطيران بالعالم فقط بلندن، وهذا بيمر عبر آلية السنديكيتد لونز، القروض المدعومة.
Mr. Bashir, sorry to interrupt. Can we do this in English because the others are wondering why they're unable to understand what you're saying?
No,
can we do this in English, please?
Was speaking Arabic, that's why. Anyway, we'll repeat myself.
Please,
Qatar
thank you.
Airways wanted to buy plane from Airbus, and the government of Qatar provided its counter guarantee against this transaction for $250 million. Now, we at ICBC, the Industrial and Commercial Bank of China, they are authorized by Qatar Financial Center Regulatory Authority to do business in Doha. Now, was the bank approached by Qatar Airways and government of Qatar. ICBC differs from any other financial institution because we have in Asia aviation division, and this aviation division deals with this kind of industry. Now, the government of Qatar created an SPV in British Virgin Island. This SPV purpose was to be the pool of money sent by one party to another party for easy collection of funds. This was a pure technical financial transaction with no risk issued because we have the government of Qatar counter guarantee. But in another example, Arab Banking Corporation, I recall they spoke with the Chinese bank sometime in 2012, and they approached us for a transaction syndicated loan for $2 billion. The counterparty of this transaction was based in London, the BNP Paribas. And BNP Paribas advised us as a Chinese bank that they have created a trust company in Cayman Island. The trust company as SPV, Special Purpose Vehicle. So the Chinese corporate officers spoke with me. I used to be the bank compliance officer and the money laundering reporting officer at that time, and requested my opinion about this issue. So I asked the BNP Paribas, do you assume responsibility over this transaction, over this SPV in Cayman Island? And the BNP Paribas said, no, we do not assume any responsibility, and this SPV doesn't fall under our obligation. So my recommendation was, we cannot participate in this transaction. And later on, 15 days later, 2 weeks later, BNP Paribas communicated with the Chinese bank, the corporate officer, and said, we are ready now to have this SPV under our full responsibility. Now, my question to you, if you are in my shoes, in my place, and this happened to you as compliance officer, and this bank comes to you after 2 weeks, will tell you, we will assume responsibility about this SPV. Will you go forward and carry this transaction, or you stick with your opinion and you say no? This is my question to everyone. It's a tough question, tough decision to be taken, but you have to take it. You have to give opinion to your management. What would be your decision? Yes? Any feedback? Hello?
I think everyone's gone silent.
I believe we don't share the responsibility of the SVP, even if the branch is recommending that.
Let me, no. Forget. What do you mean you do not share responsibility? Can you explain?
Yeah, it's mean if the SVP has been recommended by the branch to hold the responsibility for it, we cannot hold it. We cannot approve to have the responsibility as CBQ. So for sure we will reject it.
No, listen to me. Forget about CBQ. Forget about CBQ. I told you I used to be with the Chinese bank. If you were in my place at the Chinese bank, forget CBQ or Qatar National Bank or whatever the case would be, or Doha Bank. You are a compliance officer at the Chinese bank now, and you have this transaction for $2 billion. The counterparty in London created an SPV in Cayman Island or BVI, whatever the case. And he said, we do not assume any responsibility or obligation. And my opinion was not to go forward with this transaction. And the corporate officer told BNP Paribas, we cannot do business with you based on our compliance officer opinion. Later on, 2 weeks later, the French bank will come again and will advise Chinese bank, the management, then now we can assume responsibility of this SPV. And the management will come to you and ask for your opinion for second time. What would be your answer?
I will stay in my opinion to reject this SVP because in any way it's already initiated in the Cayman Island. So it's already in high risk and for $1 company.
Yeah, but let me tell you something, my friend. All SPVs are issued in Cayman Island and in BVI and elsewhere. The case of Qatar Airways, government of Qatar, the Prime Minister Hamad bin Jassim at that time, as Prime Minister of Qatar, created an SPV in Cayman Island. For the SPV was about $10,000 as capital, nothing. $10,000 for a transaction, $250 million. But who created the SPV? Government of Qatar. BNP Paribas is a global bank. If this global bank at first time said, yes, we'll assume responsibility, my decision would be, I will go forward and participate in this transaction. Because no one will issue SPV, my friend, in Doha or UAE or France or in New York City or in Washington, D.C. The purpose of SPV to have paying less taxation in tax haven country. The counterparty is the most important party. Is the counterparty trustworthy? Does he assume full responsibility? Yes or no? Is the SPV created with no responsibility on the connected parties? Then we have a problem here. We have a red flag. Now, under Qatar law, you can create an SPV and trust company.
We are not hearing you, Mr. Bashir.
Sorry?
We are not hearing what are you saying.
I'm saying
The last
under
part of under Qatar law.
I'm saying under Qatari law, you can create an SPV and trust companies. It's allowed by virtue of law, Qatari laws. Because not all SPV or trust company do illegal business. The illegal business done by connected party counterpart who use this SPV or trust company, misuse it for money laundering and terrorism financing only, or financial crime. But other trust company or SPV are not used, but we monitor those transaction by transaction to see connected party component, apply risk-based approach, and to see is there a level of high risk entities, high risk transaction, who is behind it? Is there behind it individual party, a PEP? Now under law number 20 of 2019, domestic PEP are classified as PEP. Under law number 4 of 2010, 10 years ago, domestic PEP were not classified as PEP. Under the new Qatari law, domestic PEP, any political figure or public figure in Qatar opening an account with you is classified as PEP. You cannot not to classify it.
Mr. Bashir, just 1 second. Is everyone able to hear Mr. Bashir clearly, or is there a background noise when he's speaking?
No, there's a background noise. So
I think, Mr. Bashir, is your speaker on your phone?
Yes, I'm speaking on my phone.
No, I mean, is the speaker on your phone? Because I think that's why it's creating a noise. Do you have a earphone with you? Can you plug your earphone onto your phone?
Yes, I'm holding my phone close to my face.
No. That's why there's a background noise. If you can keep it slightly away from you or use a earphone, then everyone will be able to see. They'll be able to see you first. Now it's fully covered with your phone.
Okay.
Your face is fully covered with the phone. If you can use a earphone.
You want to see me? I will come
Definitely.
to Doha to see you, no problem. No, let me check something here.
Yeah, please. Thank you.
Something. It's about seeing me. This is easy, my friend. I will.
Mr. Bashir, can I also make a suggestion? Do you want to give them a 5-minute break until so that we can quickly fix your audio?
Yeah, fine. Yes. Would
Good.
be
Is that okay with everyone?
Yeah, yes. So-
Very good. Just give. Let's take a 5-minute break. Okay, until Mr. Bashir fixes his audio.
Okay.
The team from Commercial Bank, are you all okay with this? A 5-minute
Sorry?
break? A thumbs up?
Can you see me now?
Yes.
I activated the video on the laptop,
Okay, that's better.
but you should see it also, not me. You should see the screen, the PowerPoint.
We are having like big black issue.
Yes.
We are not seeing anyone.
And we'll do asking question by chat. Now we are talking about AML and the risk-based approach. We'll move forward. About risk-based approach KYC. Is my voice clear?
Yes, Mr. Bashir.
My voice clear?
Yes.
Yes, sir, it is clear.
Talking about risk-based approach to KYC. The risk-based approach to KYC is based on different levels, level 1, level 2, and level 3. Under level 1, we have basic KYC, evidence of identity, evidence of address, sanction filtering. And under level 3, high-level risk, we have enhanced KYC, basic KYC plus nature of business, origin of funds, purpose of the account, type and level of activity. This is at account opening level. We have shown two different levels. Level 1 risk, the basic one of KYC, and the enhanced KYC. Moving forward, the account opening management is about to monitor account activity. which requires account to be classified as level 2 or level 3. What do you mean here by level 2 or level 3? It means here, at this level, monitoring to identify account activity, which requires account to be reclassified at level 3, monitoring of transaction against customer profile on monthly basis, and based on those levels, we have monthly review, monitoring of transaction against customer profile, and KYC relationship review approved by senior management. Those 3 levels of KYC on risk-based approach will give us a clear idea how to move from basic KYC, obtaining evidence of identity, evidence of address, is the entity subject to sanction. We use sanction filtering, who audit check or Thomson Reuters or else, or equity or whatever the monitoring system you are using. And based on the level of monitoring, you reclassify the customer under level 1 or you upgrade it to level 3. If it is a high-risk customer, you apply enhanced KYC, which is basically from the basic KYC plus you go deep in nature of business, the origin of funds, purpose of account, and type of hotel activity, and so on. What regulatory expectation on risk-based approach? You are subject to Qatar Central Bank supervision. AML programs must be implemented on risk-based approach according to law number 20 of 2019. The regulator expects you to do the following, to take the following factors into consideration with policies and procedures to support AML programs as implemented. Now, on the risk level, you have the client, example, a PEP or high net worth individual. If you have a relationship with financial institution or correspondent banking, you are doing non-traditional banking business or doing business with money service business like Western Union, MoneyGram, or similar. Charitable organization or NPO. Any type of business identified by government authorities as high risk for money laundering. Now, under products and services, you have the services and product as private banking, the payable through account, the wire transfers, and the official items. All those services go through correspondent banking. How far you are as correspondent banking and respondent banking doing proper due diligence, this is what the regulatory expectation from you. Geographic regions, Middle East and Latin America. Why Middle East? Because Middle East is cash-based business and cash business. We do transaction on cash. Latin America is well known for what? For drugs, for cocaine. A lot of cases happen. We have the black market peso exchange where from Colombia and Latin America, shipment of drugs sent to USA or sent to Africa or sent to the Middle East or Europe. Take, for instance, a case study that happened for a Lebanese bank that was listed by OFAC last August 2019. Jamal Trust Bank was listed by OFAC under US Treasury. Why Jamal Trust Bank was listed by OFAC subject to sanction? Because there was evidence and going concern that people of Hezbollah, as you may know, Lebanese party, but loyalty to Iran, classified as by USA as high-risk party, as terrorist organization, like Qaeda, like Nusra, like other militiamen. Now, the American authorities had concern about the transaction going on in Jamal Trust Bank, with connected parties with Hezbollah. Members of Hezbollah were opening accounts with Jamal Trust Bank, and the bank was doing international transactions. And the American authorities have evidence for those transactions, and Jamal Trust Bank was listed by OFAC and ceased to operate in Lebanon. This is very recent, last year. 2011, Lebanese Canadian Bank was listed by FinCEN. FinCEN is the American FIU, like in Qatar we have Qatar FIU. In USA, the FIU is called FinCEN, Financial Enforcement Crimes Network, FinCEN. FinCEN listed Lebanese Canadian Bank as primary money laundering concern. Why? Because any foreign banks, my friend, opening an account with any American bank, he is subject to sign the USA Patriot Act Agreement with the correspondent bank in USA. Any bank worldwide, in Qatar, outside Qatar, in China, in Singapore, or in Thailand, or in Europe, or in Africa, or Latin America, or in Canada, wherever, whatever the bank exists, the location, and they want to open a correspondent banking account with any American bank, he is subject to sign the USA Patriot Act Agreement. The USA Patriot Act Agreement, as you may know, it was enacted after 9/11 incident that happened in New York City. Under the USA Patriot Act Agreement, all the respondent banks has the obligation to abide by the law USA, not to allow their institution to launder money or to make terrorism financing, contribution directly or indirectly. So any bank is considered by American authorities as supporting terrorism or not abiding by sanction will be subject to penalty or be listed as primary money laundering concern. Couple of international banks like HSBC, Standard Chartered Bank, Barclays Bank, Societe Generale, or BNP Paribas, or else, were subject to a huge financial penalty by the American regulator, or by regulator in Qatar as well. And we'll give you a couple of examples during this presentation. Now, on the domestic level, it has nothing to do with USA. On international level, it has to do with USA Patriot Act Agreement. The regulatory expectation, they expect from you as compliance officer to abide by the law number 20 of 2019 and how you classify your customer on risk-based approach. Moving forward, we have regulatory and compliance data convergence in financial crime AMT. Based on FATF papers dated March 20 on digital ID, doing transaction, we spoke about it. We have company I mentioned to you now, it has a branch opened under QFC system called Valores. The Valores provided this slide. It's based on digital and dynamic tiered KYC, based on know your customer under KYC, doing due diligence through unique identifier, doing enhanced due diligence, KYC data convergence, link identification, customer identity, profile check, KYC data enhancement. Is my voice clear before going on?
Yes, Mr. Bashir.
Okay, sir. So on the KYC level, we have personal verification, work and residence information, financial information, cross-selling, account and services, and of course, surveillance, ongoing customer surveillance, new and existing customer, enhanced due diligence, periodic customer review, and administrative tools. On different level, we have know your employee. Why? Because when you hire a new employee, you should look at this background. All banks, financial institution, exchange company in Qatar will or else will ask the new employee of police record whether this new employee has committed a felony or a crime. That's why we look for police record. And when I joined the Qatar Financial Center as their consultant, I provide a police record. When I joined ICBC, provided same document. When provided to Royal Bank of Scotland, provided same document because I may have been in Qatar in 2010, but no one knows what will happen later on 2011 or 12 or 13 or 14. That's why we each time hire, the bank apply KYE policy, the KYE know your employee due diligence for new employee and certification, CV screening, personnel and work experience. Under work experience, we provided the references and regulatory authorities and international banks contacted the references I provided to have their feedback about what I have done previously, whether my previous employer were happy from me or not. And this is very important when you hire a new employee. Behavioral profiling, way of living. We can see in many banks in Doha, an employee with, let's say, starting level, unless he's coming from a rich family, this is totally different. Having luxury car or Rolls Royce or Range Rover or Mercedes year to date. But any employee who doesn't coming from rich level, family with wealth and hired, his way of living will tell you about his behavioral profiling, whether he's doing side income or other kind of income could be suspicious or not. This is very important to look at. Is the employee taking vacation, coming on time, attendance, there's recognition and promotion, the customer onboarding, acceptance on risk-based scoring or not. So this system, the regulatory compliance and data provided by Valores will provide you full picture doing the data or KYC, digital and dynamic tiered KYC, will tell you about system segregation of duties, independence, corporate governance, being proactive or not, and so on. Patriot March 2020 Digital ID states, risk-based approach recommended by this guidance relies on a set of open source consensus driven assurance framework and technical standard for digital ID systems. Among the standards referenced are International Organization Standardization ISO, World Wide Web Consortium W3C, Fast Identity Online FIDO Alliance, Open ID Foundation, and United Nations International Telecommunication Union ITU. Those standards all applied under risk-based approach for digital ID guidance. Points to consider here when you are going into this area, legitimate products and services can be used to mask illegal origin of funds or to move funds to finance terrorist act or to hide the true identity of the actual owner or beneficiary of the product or service. Is my voice clear?
Yeah, it's clear.
Okay, sir.
Yes.
You may also want to assess the product and services by the type of market that they are directed to. Example given, corporation, individual, business, people, wholesale or retail, etc. This may have an impact on the risk vendor risk. Another question, to ask yourself whether the product or services allow your client to conduct business or transaction with higher risk business segment, or could be used by your client on behalf of another party or third parties. Another point to consider, your business offers services such as international correspondent banking. Foreign financial institutions are not always subject to the same regulatory framework as yours. That's why, as such, some of these foreign institutions may pose a higher money laundering risk. It is a known fact that foreign correspondent accounts have been used by criminals to launder proceeds of crime. In addition, shell companies can also be used in the layering process to hide the true ownership of the accounts at the foreign correspondent financial institution, which can allow criminals and terrorists to more easily conceal the source of funds and use of proceeds of crime. Now, moving forward to impact of COVID-19 on the detection of money laundering and terrorism financing. FATF published a paper on COVID-19 in May 2020 and is continuing to monitor the situation. The crisis has exposed weaknesses in some systems and institutions, including poor business continuity planning and outdated technology infrastructure. The overall global system has been resilient and adaptive, and the risk-based approach set out in the FATF standard helps countries to respond appropriately. What we are talking about. Many countries have noted flexibility, risk-based approach, domestic coordination, engagement with the private sector, and support for technological solutions as important to their response. FATF published a paper on COVID-19 on May 2020 and is continuing to monitor the situation. Criminal economy has been impacted by COVID-19 and criminal behavior is changing. Changes in business operation, including associated legitimate financial activity, can help to obscure suspicious money movement, but also reveal previously hidden illicit conduct. The risk situation is continuing to evolve under the COVID-19. We have emerging threats and risk in relation to money laundering and terrorism financing. Increased fraudulent operations through the following: attempt to avoid the due diligence measures, the CDD, specifically when establishing a business relationship or through exploiting the individuals in the business relationship. Raising funds of illicit purposes. Make fake medical deals by securities issuers. Fraudulent investment, specifically trading in illicit medical supplies. And we saw a lot of business going on now for medical supply by new players we didn't know before, providing their services and making use of the COVID-19 contagion to do money through illegal processes. We have a case study here, advanced payment fraud involving a number of European countries detected in March 2020. Transaction going on between 1.5 million euro from a buyer in Germany through a dealer and supplier in Britain and European Union using different level of destined for Nigeria. So transaction going on from Germany through Europe, through UK to Nigeria to make a fraud range between 550,000 dollar to 2 million to euro 880,000. Total transaction estimated at 1.5 million euro between buyer and dealer doing illegal fraudulent company. So German company received a down payment amounting to euro 15 million from the federal state. The German company contacted a legitimate Spanish company, but the company website had been closed, and recommended an Irish agent. The agent made arrangements for the delivery with alleged manufacturers from the Netherlands. The masks were supported or supposed to be handed over on 27th of March in Amsterdam, but didn't take place. The race to follow the illicit financial flows began. So COVID-19 created new business for masks. In Lebanon, the mask used to cost before COVID-19 250 Lebanese pounds. With the block of COVID-19 last February, the price went to 1,000 Lebanese pounds, to 2,000 Lebanese pounds, to 3,000 Lebanese pounds, and you cannot find masks. In the USA, I have a brother in Phoenix, they cannot find masks in USA. Even buying masks through Amazon was so difficult. There was a huge demand on masks to be in compliance with COVID-19 requirement, and this opened the door for new business and new people to make illicit transaction and to make some bucks and fraudulent activity. Also in Qatar, if you remember, last February and March, you go to a pharmacy and they will tell you we have no masks. Why? Because nobody was prepared to have supply of masks in the warehouses to provide for all population. And because of COVID-19, it opened the door for mafia and dubious person to do illicit transaction. The COVID-19 and the changing money laundering and terrorism financing landscape, we saw here different level of crimes. Online fraud, cybercrime is increasing. Misuse of government stimulus funds, which means government paying NPO and NGOs money, and we saw a lot of NPO and NGO making misuse of government funds. Selling fake or stolen personal protective, organized crime activities, extortion or else, and other level of organized crime going on. This is stated by FATF paper. I believe my friend Malavan sent you the FATF paper that I have provided to you to have read it, and provided the other FATF papers for March 2020 about digital ID and the recommendation by FATF. Now, under this COVID-19, we have exploiting volatility in the financial sector through the following: attempt to conceal proceeds in legitimate economic funds and exploit the economic situation for licensed parties affected by the pandemic. Perform large deposit and withdrawal operation that falls outside the regular pattern of transaction of customers, like source of income and wealth, or exploit liquidation of investment and sale of securities. Exploit investment in securities and other securities to conceal illicit source of funds. Is my voice clear? Hello?
Yes, Mr. Bashir.
Okay. Examples of measures undertaken. Sorry?
It is clear, sir.
Okay, sir. Okay. Examples of measures undertaken by licensed parties during the spread of a new coronavirus, COVID-19, that were monitored during remote on-site visits and investigations on licensed parties' practices through a circular issued by QFMA, Qatar Financial Market Authority, in this regard. The Qatar Financial Market Authority in Qatar provided a paper on COVID-19 guidelines for red flags. There were challenges faced the licensed party during the coronavirus pandemic. Customers unable to attend the licensed party premises to open account, update their data. Licensed party unable to deliver original copies of checks to customers. Difficulty sending original copies of documents to supervisory authorities because they are required to provide certain report to supervisory authorities on monthly basis or quarterly basis or periodically. We have under COVID-19 key finding, threats and vulnerabilities that present emerging money laundering and terrorism financing risks. Such risks could result in bypass customer due diligence measures, increase misuse of online financial services and virtual assets to move and conceal illicit funds, exploit economic stimulus measures and insolvency schemes as a means for natural and legal persons to conceal and launder illicit proceeds, opportunities, increase of use of unregulated financial sector, creating additional opportunity for criminal to launder illicit funds, and misuse of and misappropriation of domestic and international financial aid and emerging funding. Another key finding, the more you know about your customer, the more accurately you can monitor them for suspicious activity. The KYC data can uncover new revenue opportunities. Use this additional revenue to recognize your compliance business cases. Now, I'm going to show you here on July 30, 2025, provided for COVID-19 a webinar. This webinar, I will click on it to have a look at it, to hear some information if you can have access to it.
We lost the picture.
Just a minute. It's opening now.
No, not yet. Still a blackout.
You can see it now.
Mr. Bashir, we can't see anything. It's just a blank screen.
Tell you what. Now we will stop this video. You can
Yes.
see it later on if you would like to. Later on,
We can't see anything,
and we'll continue with our
Yes.
presentation.
Yeah, that'll be good. We can.
Access the video through the link I have provided to have full listening of the video to have more enhancement. Download this video. After brief update on risk reported by FATF and financial services
voice is not clear, Mr.
members
Bashir.
and observers.
Sorry, 1 second.
Yes,
The voice is not clear and it's very low.
my voice is very low.
Yep.
It's better now. It's better now.
Yes, now better. Thank you.
Okay. What I was saying, after a brief update of risk reported by FATF and observers, representatives from Australia, Mexico, Interpol, and Europol provided update on different perspectives on the key money laundering and terrorism financing risk to be aware of through this video.
how the COVID-19 changed the criminal economy and what the key threats and vulnerabilities are we seeing at the national level, regional and international level. What medium to long-term risk and how do we see emerging from COVID-19 crisis? What are some good practices and strategies the public and private sector can put in place to manage the changing risk of environment? Also, there was on July 30, another video about the emerging risk in money laundering and terrorism financing. You can have access to it. And those videos can be found at Financial Action Task Force website for COVID-19. I mentioned you can go follow the link to have full access to those videos on YouTube. The FATF focused on COVID-19 as ensuring citizens to remain safe from harm caused by criminal activity, including money laundering and terrorism financing, should remain a priority for all governments around the world. Competent authorities must continue to be provided with appropriate resources to enable them to function effectively in the light of evolving threats posed by criminals and the constraint in resources faced as a result of the effects of the pandemic. This is a statement by FATF President dated October 23, 2020, 5 days ago. Now, FATF held a plenary meeting between 21st and 23rd of October and made assessment of a couple of countries and jurisdictions and issued a statement about those areas. Those statements, we have jurisdiction under increased monitoring, and jurisdiction under increased monitoring are actively working with FATF on proliferation financing and so on. Now, what we are talking about exactly here. Jurisdiction under increased monitoring dated 23rd of October, you can follow the link, are Albania, Barbados, Cambodia, Jamaica, Myanmar, Pakistan, Syria, Yemen, the Bahamas, Botswana, Ghana, Mauritius, Nicaragua, Panama, Uganda, Zimbabwe. Jurisdiction no longer subject to monitoring Iceland and Mongolia. Pakistan, still under monitoring, but not part of this list, taken out of the list. We have also jurisdiction subject to call for action, high-risk jurisdiction. On February 21, 2020, FATF issued concern about North Korea and Iran as high-risk countries. Same recommendation issued also on October 21st. Adopted same recommendation as high-risk jurisdiction having significant strategic deficiencies in their regime to counter money laundering and terrorism financing and financing of proliferation. So all countries to identify as high risk. Also, FATF called on members and urged jurisdiction to apply enhanced due diligence. In the most serious cases, countries are called to apply countermeasures to protect international financial system from ongoing money laundering and terrorism financing proliferation. And you can see on a weekly basis, a new sanction imposed by USA on Iran. Yesterday, we had a new sanction imposed on Iran, on ships and oil company and so on. On every week, you have a couple of sanctions imposed in Iran because Iran represents a high-risk jurisdiction. Follow up on those USA sanctions to protect your companies and your business. We have guidelines here for FATF COVID-19 risk-based approach for EDD. It starts from your KYC program, from your customer identification, the customer profiling, the customer acceptance policy, the grading of risk, the monitoring process, the investigation, documentation of finding, internal and external reporting, the audit function, and the training. Now, the KYC issues CDD. You have to consider activities as well as customer history, consider cash uses, deposit withdrawals, consider volume of international wires, consider transaction to from high-risk countries, and consider non-resident alien accounts, especially with significant volume of activity. Year 2011, I used to be in Doha. I'm still in Doha, but now outside because of COVID-19. The bank I'm banking with, they called me. They told me, Mr. Naqib, you have a salary coming to your account on monthly basis. You draw checks on your account to cover your rent. All of a sudden, we saw a check drawn by you in favor of certain British individual for 25,000 Qatari riyal. Why? So the bank was monitoring my account. Over the years, there's no red flags. All of a sudden, I draw a check for 25,000 Qatari riyal, and the bank gets concerned. What's happening? He's employed with fixed income coming to his account. Withdrawal are normal. All of a sudden, he drew this check, and I have to justify to my bank why I draw such kind of check. Why I'm giving you this example? To properly monitor your customer's account, to see if there's any abnormal activity going on. What's the reason behind it? Communicate with your first line of defense, collect information to adjust the risk of your customer. It's still low risk or medium risk or high risk, whatever the risk is. Determine the frequency of monitoring of each risk rating category. Know your customer, CDD and CIP. At opening, identify the code high-risk customers and accounts. To develop enhanced account opening procedure for high-risk customers, consult OFAC and check system whether this screening system is equity or word check or else is not sufficient for high-risk countries like a PEP or customer. And who is a PEP really? Is PEP always a PEP, or PEP is the one as stated by FATF who leave office after 1 year, he remain a PEP and later on not? In my definition, my friend, a PEP is always a PEP because once he's in position, he's subject to corrupted public figures. A lot of money goes on. I recall something. May 2008, I was participating at the Financial Crime Symposium in Doha. I was speaking at Shari Village about corruption. And I was saying that corruption starts from the top. And one military officer,
We lost the voice. We are not hearing you. Hello. Now we are hearing, but we lose.
yeah, because we have here in Lebanon what we call electricity cut. We have now electricity, all of a sudden electricity is out, and we have subscription. My God. We have to go into Zoom system and again to connect again. Anyway, so I was conducting this, delivering this presentation, and Army officer said, he told me, ask a question. You are saying that our emir is corrupted? I said, no. I'm telling you that my president in Lebanon is corrupted. Obama is corrupted. Queen of England, Elizabeth, is corrupted. King of Saudi Arabia is corrupted. The people in the UAE are corrupted. President of Egypt is corrupted. But
Mr. Bashir, we lost you.
Yeah, we
next
lost
time I will not be granted visa to come to Doha.
Okay, you're back.
Okay.
Yeah, I have a question.
Yeah, of course. Go ahead.
See, this is just what you just said about PEP.
Yes, go ahead.
You just said that once a PEP, always a PEP.
Yes. This
Now,
is my definition.
Yeah, my question is very specific, sir. Is this applicable to Qatar?
Sorry?
Will this definition be applicable if I am doing work in Qatar?
No. No. This is my own definition, not egalitarian definition. This is my definition? Because we saw many PEP in the past who left office, and after a couple of years, a new company has been approached the bank. A new company approached the bank. Is my voice clear?
Yes, sir.
Yeah, okay. A new company approached the bank and want to open an account. When screening the shareholders and the owners of this company, we saw a PEP with 5% shares, while other shareholders having 20%, 35%, 40%, and so on. We did the screening on the background of shareholders. We found that those shareholders are employed by the PEP. They have no wealth, nothing at all. They are on the board of this company, but no background wealth. So this PEP with 5% ownership created the company to obscure the source of fund to that we can see he's low risk, doesn't have control over the company, while the control resides somewhere else. So this kind of transaction should draw your attention why this all PEP is doing this. It's not
So my
necessarily
question
that
is very
all PEPs are
specific.
crooks. Sorry?
My question is, if I find a PEP who was a PEP at some point in time in the past, but the moment when I am doing the KYC, the person is not a PEP. So should we treat him as a PEP or should we exclude him from PEP?
No, when you open the account, the person is not a PEP. When you open the account, the person was not a PEP?
Yes.
Okay, now he's not a PEP. Later on, he became a minister or public officer.
When today is 28th October, I'm opening the account today. The person was a PEP, say 2 years back, 3 years back, but today he is not a PEP. Should I treat him as a PEP today or should I not treat him as a PEP today?
No. FATF says, Financial Action Task Force and law number 20 say, a guy will remain a PEP for 1 year after leaving office. So after 1 year from leaving office, he's not a PEP anymore.
But we can still treat him like a high risk or enhanced due diligence.
But if he's doing business, commercial activity, and showing in this specific commercial activity that he has low ownership, and the other owners we have no background of wealth, nothing at all. They are mere employee in this company, appearing on the board of this company as shareholders with no background, you have background check on them, you can see there's no wealth at all. You ask yourself, what's going on? What's hidden, right? And when you ask yourself what's hidden, what's the reason behind this former PEP has 5% or 3% of ownership, while other parties having more ownership with their background is nothing. They used to be employees. All of a sudden they became wealthy people. So something fishy will be going on. That's why I said a PEP could be classified always a PEP.
On the same subject, I have one more question. Can I ask?
Yeah, for sure. This is why Malaban is paying me money to ask questions.
Okay. Now, I will again be very specific, sir.
Go ahead. Go ahead.
Okay. Now, I open an account for a corporate.
Okay.
The corporate institution is based outside my country.
Okay.
It's an introduced account. So the account holder doesn't come to me directly, but he comes through an introducer.
The third party. Okay.
Yeah, third party who is a licensed entity in my jurisdiction.
Okay.
So the market model is the third party introduces me, and I receive documents from the licensed entity from the regulator.
Okay.
I find a PEP, and the PEP person is outside Qatar, outside the region, Khalij.
Okay.
So how do I treat them? Like, should I treat them separately, or should I treat them like a normal PEP? Because it comes through a licensed introducer. So does that make my risk little less?
Well, first of all, when you used an introducer to open an account, when this account opens through a third party, right?
That is correct, sir. It is an introducer mechanism.
The responsibility will remain on your part, on you, not on the third party.
That is correct, sir.
Yes, sir. Now, this new entity, new potential customer is residing outside Doha, let's say residing in Luxembourg.
Cayman Islands.
Okay. So if he's residing in Luxembourg and he provided you with all needed document,
yes.
How you can make sure that his ID or his passport is genuine?
Through world check.
Word check? Through word check?
The correctness of the passport can be verified through world check.
Correctness of the passport according to word check. Fine. So you have here evidence the passport is true and genuine, right?
Yes.
Okay. So your question is?
My question is that the fact that the account holder is not coming to me directly, but through an licensed entity, which is the same regulator as I am, does it make the account opening process more comfortable for me, or the risk remains the same?
This new potential customer subject to Luxembourg regulatory monitoring. Is this entity a bank, financial institution?
It could be. entities. Yes. For example, it could be a registered fund in Luxembourg. It could be a registered fund.
Okay, now we are talking about investment banking here. So it's a registered fund, and he's subject to regulatory monitoring and so on. You can feel comfortable that he's a regulated entity. But on the other level, this entity who is doing business with you, he was subject previously to certain censure, certain enforcement by this regulatory body in Luxembourg?
Yes.
Yes?
The answer is yes.
No, listen to me. I didn't hear your voice correctly. The answer was yes?
The answer is yes.
So now here he has previous record of something awkward regulatory issues. And you still want to do business with him?
No, but the client is different.
Sorry?
The introducing agent remains the same, but the client remains different.
No, the third party who introduced is not doesn't assume any responsibility because this is your responsibility.
I think you answered the question, sir. That was my question. If it comes through an introducing party, does it reduce my risk?
Look, tell you what, I will give you, I will ask you the question differently. Nowadays, you can outsource a money laundering reporting officer function. In your bank, you may have, or financial institution, you may have compliance officers, but you don't have risk officer or audit officer. For certain reason, do an agreement with third party to do this background check and so on your behalf.
Yes, sir.
Still with me?
Yes, sir, with you.
So now we have outsourced services of another party, but according to laws and regulation, the responsibility remain on your shoulders, not on third party shoulders.
Okay.
Now, the entity, potential customer, was subject to certain enforcement in home country, right?
Yes.
And after being subject to enforcement, he adjusted their position and still doing business, regulated business, correct?
Correct.
So what's your worries here? Why you are worried?
Okay, sir.
Okay, what? You are keeping me worried now. What's going
No,
on?
I'll tell you what the question was, and you have answered the question.
No, let me tell you something. Maybe you gave me here a motive to come to Doha and meet you in person to see what's going on. Do you accept this?
I didn't get you, sir.
I said you gave me motivation based on your question to come to Doha, meet you in person and to see what's going on. Do you accept this? Anyway, we'll move forward. Thank you for your question.
Thank you, sir.
Thank you. Now, moving forward with our presentation here, we said here the frequency of periodic review is determined by risk rating and risk activity. Determine risk-based risk assessment, the parameters for each review, target review all activities in specific period of time. routine review cash or wire activity that fall under a rule or above the threshold, and enhanced review all activities that fall under a rule or above a threshold. Document decision and parameters for your own later on. Under due diligence and enhanced due diligence, we have, when doing business with exchange companies, regulated exchange companies, we have steps for migrant to become bank. New migrant arrives in Qatar, and this migrant became employed and migrant became a remitter who want to send money to an exchange company, MoneyGram or else, to his parents in home country. So here he's using MoneyGram services, and MoneyGram is using their parameters with the bank, opening an account, and the migrant becomes bank and remits at bank, which is now a company agent. So this process, this is called the economic inclusion, steps for migrant to become banked. Sending money through exchange agent and through its bank outside, or later on he will become account opening at a bank in Doha. Why a bank and exchange company need to build a KYC process? Because here we have the agent for an exchange company, you have bad guys, you have nice guys, and bad guys doing individual structuring of transaction in small amount at multiple locations, exchange, and will detect to file STR. The consumer here, we do it, identified by us as AML officer, are doing what exactly with bad guys? They are doing smurfing or structuring. What do you think? I'm asking a question here.
Can you repeat, sir? Your voice is breaking.
Yeah, I was saying here that now we have bad guys want to do business with an exchange company based in Doha through different agents. And those bad guys using certain consumers. Now, we say that individual structuring transaction in small amount at multiple location, exchange will detect and file STR. Now, the individual working together to structure transaction may be detected by agent, regardless whether agent detects, exchange will detect and communicate with agent to ensure filing of STR. Those individuals or consumer under money laundering laws and regulation and under your own policy are classified under what? When someone wants to launder money, he will do what? He will structure the transaction, correct?
Yes.
Now, those transaction structure, they're done by who, through what? Through different persons, right?
Yes.
Those persons or the entities or agent, there's technical wording, we use it in this process, is what I'm asking about the technical wording. Smurfing.
It is smurfing, yeah, smurfing.
Smurfing, right?
Yes, correct. Smurfing.
Yes, that's why when you monitor, you see is a structured transaction done through smurfing, you have a ground for suspicious activity to file an STR at later stage. Going forward, under KYC processes implementation, you have the background check you are using, whether audit check or else. You have transaction analysis, OFAC screening, compliance program set up. You provide on-site review. You have a couple of agents, tools coming from agent, and you have on-site visit or site review of the transaction. We used this slide to do a presentation for Larry Exchange in Doha a couple of years ago. So I took this from previous presentation done by my company to Larry Exchange 2011. Now, the enhanced due diligence procedure, what is the source of fund, why it is required during the initial onboarding and periodic review, why the source of fund is required, analyze the source of fund, ultimate beneficial owner, documents to use to confirm source of fund, step 5, adverse media and negative check, step 5, conduct on-site visit. Now, we have a specialized enhanced due diligence, the Panama Papers. What the document reveal? Follow the link on this slide. This is my blog under online for compliance alert. You can see full documentation of Panama Papers and those involved here. Icelandic Prime Minister, Argentine President, Russian President, Chinese President. This is Ukrainian President, British Prime Minister David Cameron at that time, under what we call the leak Mossack Fonseca Panama-based firm that had 11.5 million leaked tax document originated. There was a big leak, big scandal about it, called the Panama Paper leaks about political connection. For better doing proper due diligence, enhanced due diligence about potential PEP, I advise and recommend everyone to go to Panama Papers leaks to see who's who really and who's really your customer, what he's doing outside, where he's opening his account in BVI, in Cayman Island, or in Barbados, or differently. Not necessarily in Luxembourg or Cayman Island, could be in Mauritius Island, could be in Mozambique, could be in Haiti. Now, under Panama Papers, we have 9-month tax evasion probe that is linked to YouTube. There are thousands of individuals and organizations being linked directly or indirectly to offshore companies. 12 head of state, including 6 currently in power, 128 senior politician or civil servant, 14,000 companies, banks, and law firms, and 511 directly implicated banks, including HSBC, Union des Banques Suisses, Deutsche Bank, and Societe Generale. Tax evasion scheme, 11.4 million document on 214,488 offshore companies from 1977 till 2015, all residing in Panama, evading taxes and evading being tracked as corrupted politicians. Go to this link to see this YouTube, give you ample idea what we are talking about, and to have more enhancement about proper due diligence. How to complete successful compliance due diligence? Put the main focus on uncovering crucial information about the desired business before you start account opening. Specifically, to have a successful compliance due diligence, follow the steps. Have defined compliance risk profile set for the target customer. Make sure that the business you are approaching didn't violate any anti-bribery and AML/CFT laws. Check if the data protection rules have been implemented in the ethics of this customer, and if they were, make sure that these rules have been respected and followed. And ensure the trade of the target company are respected, and think in advance about the consequences of specific issues you come across and figure out their potential long-term impact on your current bank. Key takeaways. KYCC collection is an ongoing practice and not restricted just to onboarding. The more you know about your customer, the more accurately you can monitor them for suspicious activity. The KYCC data can uncover new revenue opportunities. Use this additional revenue to rationalize your compliance business cases. Under the digital identity takeaway, digital identity not synonymous with digital footprint. Inclusion of key and useful information in suspicious activity filing, cybercrime analysis training of AML and cyber teams, financial intelligence unit and cyber intelligence unit collaboration. Using resources, Financial Services Information Sharing and Analysis Center, ISAC, FBI Internet Crime Complaint Center, and the FBI Infraguard chapter for all states in USA. Consider asking yourself this question. Are we taking all reasonable measures to mitigate the risk by leveraging global data that is accurate, reliable, timely, robust, and verifiable? Now, you had mentioned audit check. Audit check collect their information, my friend, from multinational lists and from negative media. Does audit check or similar provider are fully reliable or not? I'll give you an example. One day there was a company similar to Audit Check. In year 2005, I managed myself with some colleague. We approached Lebanon Bankers Association, which is a privately owned association by operating banks in Lebanon. And we approached this association to create a committee within the association for compliance and money laundering. And later on, I represented my bank and my colleague represented their banks in this committee under Bankers Association. We found later on that one screening company like Audit Check classified us as compliance officers in private banks in Lebanon, being member of this committee at Bankers Association as PEPs. Why? I spoke personally with this company, said, this Bankers Association is public function. How come? Have you did your background check about this Bankers Association in Lebanon? He said, no. Said, you didn't do your background check. How you assume this is a public company? It's not a public company, not state-owned, like in other countries. Go to the background check, see this Bankers Association, how it was licensed to operate. Is it classified as a trader, licensed by Ministry of Justice, Ministry of Commerce, or else? Who are the shareholders? Are the private banks in Lebanon, not state-owned banks. Their money coming from their own business. We are the officers at private banks in Lebanon, members in this committee to fight money laundering. Now we are compliance officers to fight money laundering, classified as PEP. How come you can fight money laundering and be classified as PEP? So this company now ceased to exist. Just to give you a hint, an example, how reliable sometimes the information can be. Now, can we get to this data quickly through modern delivery channels? Can we leverage analytics to understand direct or indirect relationship, handle looping, control, and support all endpoints? Another takeaway, Due diligence should be reasonable, risk-based, and supplemented with sufficient levels of documentation. You are not expected to be the criminal investigator. So our job is to collect information, apply rules and regulation, but we are not investigative. We do not replace the criminal investigator and enforcement agencies. Don't fool yourself that you are a compliance officer, you are a criminal investigator. No, you are a compliance officer to abide by rules and regulation based on setting of rules and data. Do your own job, but do not consider yourself as Mr. Gadget. Reinforce, or Mr. Columbus in this famous movie film. Reinforce and acknowledge positive behavior exhibited by casino employees. Risk management is a journey, my friend, not a destination. You need continually tap into all the internal and external sources of information at your disposal. And we are going to talk now about the new fifth pillar about customer due diligence, the beneficial ownership. Nowadays, all regulations, especially law number 20 of 2019, focus on for financial institutions and designated non-financial business professionals about identification of beneficial owner and ultimate beneficial owner, and how beneficial owner should be registered at Ministry of Commerce and Industry in Qatar. So for customer due diligence, we have in principle 4 elements: customer identification and verification under current CIP, beneficial ownership identification and verification, approaching risk-based procedure for conducting ongoing customer due diligence to include, but not be limited to, understanding nature and purpose of customer relationship to develop a customer risk profile and conducting ongoing monitoring to identify and report suspicious transaction, and on risk basis to maintain and update customer information. Now, talking about beneficial ownership, we have Corporation A. Under Corporation A is owned by Corporation B with 80% ownership and Corporation C with a 20% ownership. Under Corporation B and Corporation C, we have a couple of entities who owns B and C. Those entities are, under B1, we have 2 individuals who owns 80%, owns 100% of the Corporation B, but their 100% is equal to 80%, and another individuals who owns 100% of the 20% of Corporation B. Under Corporation C, we have one entity who owns 40% in full participation. Another 2 entities, they own 60% of Corporation C. Each one owns 49 and 51%. Now, on the identification of beneficial owner as stated by law number 20, anyone who has control over 20 or 25% ownership in any company. So based on this example, under Corporation B, B1, and under Corporation C, C1 are the beneficial owner of Corporation A. Because of their ownership, 140 of 20% makes over 25% of Corporation C, while both entities, 49 and 51%, they do not form each one over 20%. Now, I will give you here an example before going forward. At one time, before I came to Doha, I was the compliance officer at one of the banks in Lebanon. One day, a new customer came to a branch and opened an account. And she stated in her KYC, she is employed by used car services company, and that her monthly salary equal to $2,000. In Lebanon, it's not like Qatar. Employees can be cash, their salary can be paid in dollars or in Lebanese pound. And in the banking central bank, we have a clearing system for Lebanese pound and US dollars clearing system. So any client or any Lebanese can have issue a check in US dollars cleared through central bank, or issue a check in Lebanese pound cleared through central bank. We have double currency standard, while in Qatar and every single country it's one currency standard. Now this potential customer came, opened an account, stated her monthly salary is $2,000. And she has no other source of income. 2 weeks later, she make a deposit in her account, couple of checks amounting to $15,000. Once those checks collected by through clearing, she came to the branch 5 days later and requested the branch to pay her the value of amounts collected in cash. And it drew our attention that she stated her monthly salary is $2,000. After 2 weeks, she made a transaction for $15,000. So we noticed that the owner of the used car company had drawn checks to his order, endorsed in blank to this lady, and he issued check to his order drawn on his own bank account. This lady came to our branch, make checks deposit, checks collected through clearing, cashed the amount, and left the branch. This transaction repeated itself more than once. So I took a decision at that time. I asked the branch manager, when the lady appeared to make collection of the value of checks in cash, you tell her that we have no cash at the counter, and we can issue for you a bank draft covering the collected funds. She came, he executed my instruction, and she issued a bank draft that came in the name of Malawan. So Malawan is now the beneficiary of the check. Went to another branch, want to cash the money. The branch told him, this is a crossed check. You have to make deposit into your account in your own bank, or you can open an account with us, and later on you can make withdrawal funds. Of course, to open an account at a branch, he's subject to due diligence, KYC, and so on. So Malawan said, yeah, okay, I will do it. He opened an account, makes check deposit, and later on collected the funds and left at his new account, let's say about 5% or 10% of the value of the amount. The branch manager convinced him to keep certain money for his further future transaction. Another customer came also with a bank draft because of this process, and this new customer went to another branch of the bank, and same process happened. We monitored all the transactions, all accounts opened later on. We found no relationship between those accounts holder, new accounts, at different branches. At that time, the bank had in Lebanon 85 branches. We saw no relationship between our main account holder at this initial branch and the other beneficiaries of money collected at different branches. what was really happening. We saw here an indicator and red flags. We filed an STR to Lebanese FIU. We found later on that those people were going to the used car showroom and asking the showroom owner to put, let's say, a BMW 10 years old for sale at a high price, which means if you want to pay BMW at $100,000 or equal and doesn't worth it for this amount of money, nobody will buy it. Why someone want to put his car at used car service showroom at high price for sale while this car doesn't worth this amount? And we found that those people were smuggling drugs on those cars, old used cars, and those drugs delivered to certain people is willing to pay the value of this transaction through this complicated channel. The used car company went closed, the owner went to prison, and associated parties went to prison later on. Monitoring of suspicious activity, my friend, is not an easy task, but you have to follow up ongoing review and identify beneficial owner. For this lady, we continued with the verification. One day she came, the branch manager asked her to sign an application for stating who is the beneficial owner of those transactions. Address, telephone number, everything. And she refused and made a fuss about it. We insisted as compliance to obtain the beneficial owner of those transactions. And that's how we tracked everything later on and filed our STR. Identification of beneficial owner is very important, my friend. And it's required now by law number 20 of 2019. Now, under beneficial ownership requirement, must identify and verify the entity of beneficial owners of all legal entity customers, other than those excluded for each new account at the time of a new account is opened, other than accounts that are exempted. Certain accounts are exempted, like accounts for public offices, government agency, regulatory body are exempted from identification of beneficial owner. Why? Any idea? Why an account for government body exempted from identification of beneficial owner? Can I have an answer?
Because it is government.
Because it's a government. It's not privately owned. It's state owned. Right?
Correct. Yes.
Yeah, but mind you, my friend, we can see now the state-owned banks operating as private banks. Although those state-owned banks operating like private bank are listed in stock exchange, cannot be exempted. Only government agencies not doing business commercial activity are exempted. Beneficial ownership has two mutually exclusive prongs: control and ownership. Compliance is achieved by obtaining certification in the form of MLRO of the accuracy of information. May rely on beneficial ownership supplied by the customer, provided financial institution has no knowledge of fact that would reasonably call into question reliability of the information, which means a corporate company provide you with who really the beneficial owner, and who really should go deeper to see who are the shareholders. In Qatar, shareholders could be 51 Qatari national and 49% an expat. So beneficial owner here is clear. But in big corporation with multiple shareholders, you start from 25% or 20% identification of shareholders to identify who is really the beneficial owner, because certain beneficial owner who owns, let's say, 75% of the company, we can find all, or let's say 15% of the company, couple of shareholders each has 5%, 10%, 15%, 17%, all of them under sub-entities and sub-partners under this entity could be the beneficial owner of the mother company, like the case we saw here about beneficial ownership. So beneficial ownership example, we have a customer A owns 50% and company B owns 50%. Company A, we have Alan who owns 60% and Betty owns 40%. Under company B, Betty owns 33 and the third percent. Carlos owns 33 and 1/3, and Diane owns 33 and 1/3. Now the beneficial owner here, who's beneficial owner? Under this rule, we have Betty and Alan, because under company B, Carl and Diane own only 33 and 1/3 of 50%, which is less than the thresholds listed by law number 20, while Betty owns 40% of company A and 33% and 1/3 of company B, and Alan's owns 60% of company A. That's why Alan and Betty is beneficial owner of this company with interest over 36 and 2/3%. Now, on the customer due diligence, we have a general rule: identify, record full name, residential area, and date of birth. Verify, undertaking, review, checking of these details using reliable, independent sources. Ensure details are genuine and the client is who they say they are. Ideally, original passport, photocard driving license, original utility bill, bank statement within 3 months. Remember, obtaining ID and verify is not knowing your customer, which means if you obtain a document that this customer has been verified by a third party, it's not an evidence. You should your own self-verify, make sure, because this is your own responsibility, not the third party. The third party may provide his best practice, but as we said before, this is your own responsibility. Is the information provided happen to be inadequate at one level, you cannot say to the regulator, this is audit check or equity or someone else or compliance alert did the job, because the law says, law number 20, even when you ask a third party to do a due diligence, the responsibility remains on your shoulders, not on the third party. Identifying corporate entities required for all companies: company name, registered number, business address, registered address, if PLC or LC, regulated, not regulated, proof of listing, proof of regulation, and so on. Changed condition addition. When this doing due diligence, there's a now specific requirement to undertake CDD and checks when you became aware of any changes in circumstances of your client. A new partnership, a new beneficial owner changes, transaction profile changes, your customer was doing certain kind of transaction, all of a sudden, a new kind of transaction is happening, not initially identified as the main business of your customer. So it makes a break of the profile, and you have to build a profile again from scratch. Changes in the purpose, nature of relationship, any other matter that arises and may affect your risk assessment of the client, because when there's a change of profile, your initial risk assessment has been broken, triggered, and you have to build a new risk profile to see whether you elevate or upgrade CDD from simplified risk or medium risk or high level risk. For corporate clients, same. Firms must now identify and document the governance, constitutional structure of the entity, article of association, identify and verify beneficial ownership structure, and if the person instructing you is acting on behalf of an underlying client, you must also identify and verify that individual. The enhanced due diligence and the treatment of PEPs will remain, the enhanced will remain unchanged because the PEP is classified as high risk. When you have assessed the client transaction as high, there's certain standard due diligence. The previous plus, we saw in the slides before how we move from level 1 risk to level 2 and level 3 when we have make enhanced due diligence for high risk customer, to evidence source of wealth and source of fund, ongoing monitoring of the business relationship, the politically exposed persons were previously PEP or only foreign PEP or else. Any changes, addition, to make another enhanced due diligence to widen the scope of certain circumstances where EDD should be applied application, follow certain regulation. That under this slide, regulation 33.1 is not related to Qatar, it's related to Singapore. More perspective, but we mentioned the regulation 33 for indication only, but under Qatari law, this different rule. More perspective in terms of risk factor, extended range of measures to be taken, again about PEPs or politically exposed person, widened definition, domestic PEP included, senior members of international organization are PEP. We'll take 5 minutes break and come back, okay? Now I have a question for you. A bank in Italy holds a business account for Italian company that sells gold throughout Europe and Western Hemisphere. The bank knows the purpose of this account. It is to receive payment for sales. A review of the account shows a pattern of wire transfers coming from payable through account. There's also a pattern of purchases of gold bullion held in Swiss banks. The most important factor is in assessing whether money laundering is a threat is that we have a couple of options here. Those options, a customer sells gold in the region where it carries an important or religious significance that adds to the high intrinsic value. Payment comes from third-party accounts. Payment received are in the form of wire transfers instead of cash. Account holder maintaining gold bullion rather than finished pieces of jewelry. What would be your option? What's the option that can trigger a threat to this case? A, B, C, or D?
Can you repeat first A, because I am not able to read the first option A. The
Sorry?
option A is not readable on the screen.
Kansham, you can adjust your screen.
I'm not asking who's really reliable. What's your option? A, B, C, D. I want one answer.
Now, what is option A?
You go for option A.
No. What is option A? I can't. It's not written.
Ghanshyam, you can adjust
You
your,
didn't get it.
Mr. Bashir.
Option A, customer sells gold in regions where it carries an important or religious significance that adds to the high intrinsic value. This is option A. Option B, payment comes from third-party accounts. Option C, payment received are in the form of wire transfers instead of cash. Option D, account holder maintains gold bullion rather than finished pieces of jewelry.
Option B.
B? B like Bashir or B like Berlin?
Second option. Option B.
Okay. Moving forward. According to Basel Committee, the 3 lines of defense in a bank AML effort include information technology, line of business, and AML compliance. B, line of business, information technology, and audit. C, audit, AML compliance, and board of directors. D, line of business, AML compliance, and audit. Which option do you choose?
First option.
First option? Hello?
Yes.
Option A? You mean option A?
Yes, sir.
Why? Why information technology is a line of defense? Who's meeting the customer? Information technology? How information technology can do due diligence and reporting of something wrong happening in the bank? My friend, 3 lines of defense are line of business, which means the customer relationship or the private banker. The AML compliance is line of defense, and audit department is 3rd line of defense. Option D, the answer. Another question. According to Qatar Central Bank guidelines and FATF and Basel Committee, banks without a due diligence requirement can be subject to the following: organizational risk, transactional risk, legal risk, confiscation risk. What would be the risk highlighted by QCB and FATF and Basel? Not doing due diligence requirement.
Mr. Bashir, Noel says it's A, organizational risk.
Who said organizational?
Noel.
Why organizational?
He has a challenge with his mic, so he won't. It's difficult for him to explain.
My friend, I am your customer. I come to the bank. You do not do due diligence as required by the regulator. And later on, because I did transaction with your bank, without you doing proper due diligence and KYC monitoring and all those issues, I implicate your bank in my wrongdoing legal business. So the risk here, if you are your bank implicated in my illegal activity, I will be subject to legal proceeding, criminal proceeding. I'm doing business with whom? With the bank. The bank did the proper due diligence as required by law? No, he did nothing. So the bank would be subject to criminal proceeding. Now it's legal risk, not organizational risk. Knowledge test. Minimum retention period of records according to law number 20 of 2019. And Qatar Financial Market Authority, my name not be applied to you, but we focused on law number 20. Minimum retention of records can be produced to the relevant regulatory authorities in case of suspicious activity is 5 years, 7 years, 10 years, 15 years. What would be your option? 5, 7, 10, or 15? Minimum retention period of records.
Noel says 10.
What?
I agree with Noel, 10 years. It was
10
15.
years. 10 years, the minimum retention according to law number 20. Which of the following is the most common method of laundering money through legal money service business? Purchasing structured money instrument, smuggling bulk cash, transferring funds through payable through account, exchange Iranian riyals on the black market.
Noel says C and D.
What would you answer, A and B?
No, C and D. And
C and D.
Yeah, Sijo says A.
Okay, fine. The following can be called a suspicious transaction. Customer insisting on anonymity, policy form a place where he doesn't reside, unusual terminating of policies and refunds, all of the above. Yes? Any feedback?
Noel says D. All of the
The
above.
answer is what? If you think compliance is expensive, try non-compliance. Because if you are not complying, your bank name will appear in the media. UK bank hits by record $2.6 billion and US fines like HSBC. Now, cost of AML soars over $1 billion. New bankers' equity research outline movement of fines from AML violation over the past 10 years. Financial Contact Authority fined EFG Private Bank for 4.2 million sterling pounds for failure at its anti-money laundering control. The KFC Regulatory Authority imposed 200 million Qatar Riyal fine on First Abu Dhabi Bank for obstructing of investigation into market manipulation. On May 5, 2010, Qatar Financial Center imposed substantial fine of 506 $100,000 on Al Mal Bank in Qatar and withdraw a license due failing to keep proper accounting record that were appropriate to its business and that disclosed with reasonable accuracy its financial position, failing to take adequate steps to ensure that its system, resources, procedure, and control were at all times appropriate to its business. You can find this information on the website of the Qatar Financial Center Regulatory Authority, the enforcement section. It's public news. Failing to establish appropriate internal management and organizational structure, policies, and procedure, failing to maintain a register of members and other documentation required under the KFC company regulation, failing to establish effective independent compliance function, failing to establish operate effectively internal reporting mechanism, including arrangement to identify, measures, manage, and control regulatory risk, failing to maintain share register to issue share certificate for each share allotted or transferred, failing to provide accurate information to the regulatory authority regarding its controllers, failing to ensure that the client funds were segregated from the bank's own funds, and by paying the client money into account that was not disclosed in the books and records of the bank, and failing to ensure that its entire business operation were conducted in accordance with the Sharia law. So this bank contravened the provision of regulatory authority principle on MLCFT rules, including Principle 1, by failing to observe higher standard of integrity in the conduct of its business, by failing to act with due skills, care, and diligence in the conduct of its business and provide effective management oversight of the operation and activities, by failing to ensure that its affairs were managed effectively by its senior management, by failing to have due regard to its customers' interest and treat them fairly, and to ensure that funds received by it from customers were handled in accordance with the applicable regulatory requirement, by failing to manage conflict of interest fairly, by failing to organize its affairs so that conflict of interest were identified, and by failing to deal with regulators in an open and cooperated manner, and to keep the regulatory authority promptly informed of matters of which the regulatory authority would reasonably expect notice. We have another case. I will go quickly. On 22nd of June 2010, following conclusion of investigation into the affairs of CCMB, and CCMB agreed that Qatar Financial Center Regulatory Authority imposed following regulatory action. Regulatory Authority accepted withdrawal and authorization under Article 29. Regulatory Authority accepted payment by Core Cap Merchant Bank, CCMB, of financial penalty in the amount of $200,000, and the Regulatory Authority accepted payment by CCMB of the cost and expenses of investigation conducted by the Regulatory Authority. This action was taken on the consent of Core Cap Merchant Bank and by Regulatory Authority on the ground that the Regulatory Authority was satisfied that it didn't carry any regulated activity of which has been authorized to undertake, and didn't satisfy on an ongoing basis fitness and propriety criteria of the general rule book. So because of those deficiencies, CCMB didn't comply with certain rules of control rule book, didn't comply with certain rules of individual rule book, didn't comply on certain rules of conduct of business, didn't comply with certain rules relating to customer identification documentation of anti-money laundering rule book, and didn't comply to certain provisions relating to customer identification documentation of the KFC anti-money laundering regulation, and didn't comply with accepted corporate governance procedure. Now we can go forward, but since you have to leave early, the following case we can read it on the material provided by Mr. Malaba. Thank you, everyone. Anyone to have a question? No. Anyone to have a question?
Thank you, Mr. Bashir, for your time, and thank you for your efforts information that you provided to us. Thank you so much.
Thank you.
Okay, you are most welcome.